Hey guys, how's it going? Welcome to the session recap for Euro Dollar, Tuesday the 13th of September 2022. So, higher time frames, where are we at? Daily charts, obviously bearish. Now, actually, do you know what? I know I spoke about this on the, weekly market breakdown. Typically, I'm not a massive fan of obviously spending much time on the weekly or the monthly chart because, as you guys know, I'm just trying to capture, a 20 or 30 pip intra-session move. But, some of you obviously trade the higher time frames, and also I think it's always good to be wary of what they're doing just so you can help to manage your expectations of even how price is moving on the M15 and on the 4 hour, and that kind of makes sense as I go through it. So monthly level, I have been saying this for a number of months now that we have obviously broken below these major monthly lows. And regardless of whether, long term we're coming to the downside or whatever, what do we always know after some form of break of structure? We're going to get, the equal form of a pullback. So obviously if it's a swing break, we're going to get a swing pullback. If it's an internal break, we're getting an internal pullback, so on and so forth. The point I'm trying to get at here is there was obviously going to be a ton of liquidity sitting below this extreme monthly low since 2016. We have obviously broken below that low. So at some point I would expect a minimum of some form of a pullback. Just like we did when we broke these lows, right? We got a pretty decent reaction. Am I expecting that to happen this time? No, not so much. But, it's not surprising that we're starting to see some bullish pressure coming in after we get a big break of that low. Combine that with, we're sitting at parity at the moment, that big round number, big psychological level. But also from a more technical perspective, what are we coming into? We're coming into this very clear monthly demand zone, broke this level here, broke multiple levels of supply and structure, and also, flipped this wick supply here. So not really too surprising. We may see a bit of a level. Maybe we'll just come into this inside bar before tanking, or maybe we'll see a bit more of a sustained monthly pullback. Not going to get too ahead of ourselves with sort of those bullish predictions, until we start to really break some significant structure on the lower time frames. But it's just something to be aware of in the back of your mind. Like here on the weekly chart, just go back to forex.com data feed. I feel load the drawings, bit glitchy. There we go. I mean, like I've been saying, right? Weekly order flow is clearly bearish, right? Structure, it's just tanking, pretty much just having those daily ranges here, right? So on and so forth. Very poorly drawn, but you guys get the picture. But if we look at like the last recent bit of price action, right? Price barely, I think by like a pip or so, closed below that weekly low, right? So there's every indication that potentially this could be a weekly high. I know you can almost view that, right? If you see that as not as a boss, view that as kind of one leg down of this piece of structure. Potentially this high is weak. Potentially we may get that bullish sort of weekly IBOS / chock. Well, technically we've actually already had the chock here because that was that high there, right? We've come up, we've come down, and we've taken it. The point I'm trying to get at is, this could be just literally, maybe I'm overcomplicating things. It could be a pullback into here to dump down. Or, maybe if we start to break this high, then that's when I'll start thinking a bit more seriously of a bigger pullback, or maybe just into these levels. Ultimately, I'm going to keep following the bearish order flow. I'm going to keep assuming this is bearish until that actually happens. I'm more just trying to put a little bit of, you have to have those thoughts in the back of your mind that you wouldn't be surprised, okay, maybe now is the time if that did start to happen. It's just showing a lot more bullish pressure coming in than maybe the recent peer that we've seen. There's a bit more evidence building in favor of the bulls here for the longer term picture. But like I said, never assume structure, never assume things are going to happen. We run with those expectations that strong structure will hold until it doesn't. So in a more simple case, right, we have this daily bearish structure. This is a strong daily swing high. Why? Because it caused a daily swing low. So the expectation will be that this high will hold until it doesn't. So I will be looking for shorts from these levels to try and target that weak low. But at the same time, because of all of that other confluence that we've looked at on the higher time frames, maybe you now want to take those 4 hour longs, right, and bullish continuations, and maybe anticipate that we may get that move. The way I approach that when you have those conflicting biases is I'm just looking again for quicker moves, but I'm just happy to play kind of both sides. I'm happy to play the longs, happy to play the shorts, and just managing your expectations of how far you think price is likely going to go, right? So when we had that breaker structure over here, obviously price stopped dead in its path, right? There was no real follow through. We had that initial pullback straight away. That kind of real first early indication that bullish pressure was starting to step in. Then we pushed down and tried to break below this recent daily internal low. 3 days in a row, we failed to do so. We then had that aggressive retrace, which eventually led to the bullish chock, which then eventually cleared out the supply from this high. And then that brings us up into this point, right, where we've come into kind of our first real solid daily supply level. But as I said in the weekly market breakdown, there's no inducement in the leg. It didn't sweep in any liquidity. It's kind of halfway there. I wouldn't be surprised, especially with all of the bullish confidence we've just gone through, the way in which we're pulling back to this level. I wouldn't be surprised if it's just to facilitate that daily internal pullback, which essentially is that 4-hour swing pullback, to then potentially push higher up into this level of supply here, right? Up into this extreme daily supply. Well, then I'm happy again to look for shorts with the potential that could be the daily bearish swing trend continuing, because obviously if the swing trend is going to continue, this high has to hold, right? So this becomes a very high probable area to look for those longs to target that weak low. But I would also be aware of the possibility that, again, it could just be a reaction into this strong daily internal low, which will likely be your 4-hour swing low, to then potentially continue higher and then actually break out bullish. So this is where you have to, be aware of both sides of the market, be happy to take shorts from here, potentially take profits from within here, depending on how you want to trade and how you want to manage, and then also look for the longs from within here to then target those weak highs. Okay, and that's basically where we're at. So just playing a bit of ping pong, really, looking for shorts from within here to play a bit of a pullback, then looking for the longs to target at least this high, potentially push it up to supply. Again, look for the shorts down into this low and take profits, and then look for longs to see if that's going to continue. Maybe it won't continue. Maybe the internal structure will shift bearish, which will be that 4 hours trend shifting bearish, and then we can look for shorts to target that low. Okay. But yeah, you can kind of see with the characteristics of price at the moment, sweeping those lows, especially no follow through after that boss, aggressive retrace to the upside. We're around that kind of round parity level of 1.0. I'm trying to draw it over there, right? Monthly levels as well, monthly demand, tapped into that big monthly liquidity pool below those lows. So I wouldn't be surprised if we did see that, but that's a bit more of a low probability forecast. I won't really be getting serious about that until we actually start to break out that daily high there. But it's worth noting. Sorry, just ignore these annotations. They just kind of get a bit, glitchy when I'm going through the timeframes. But yeah, so for our chart, we switched bullish, right? We had that clear bullish breaker structure with a ton of momentum to the upside. After we got that breaker structure there, it was just a bit of a small pullback. So I just classify that as 4-hour internal structure. And for me, that would be the 4-hour swing range. We did break up through that 4-hour supply, which isn't too surprising. Again, no inducement in the leg. It didn't sweep liquidity. And we just mitigated something in that extreme 4-hour wick. But the main point being, this larger box is that daily supply level, right? And what was I saying about the expectation from that daily supply level? Yes, it could be where that daily swing lower high forms to continue that movement. But we don't have structural confirmation of that, right? Until we get that bearish daily IBOS. And with the 4-hour being clearly bullish with a lot of momentum, that's why I'm just viewing this as likely just to facilitate a bit of a pullback into these demand levels to then look for that continued move to target this week high, but with the idea we can target up to these more premium levels of supply up here. And that's really the main idea for kind of the opening of the week, right? So we did have a pretty solid reaction, but then we've kind of just ranged and stopped. So again, just looking for price to ideally pull back into these levels to then continue that movement. But we can obviously play a bit of that pullback down into these levels. We can play those shorts for a quick move. Yeah, there's not really too much to add to the 4-hour chart other than this, just looking for potential shorts to come into here. But obviously everything's quite bullish. And typically what you'll notice with euro dollar is when you get that initial trend change, i.e. the 4-hour shifting bullish, it typically doesn't pull back that deep, right? Like here, we just had a bit of a pullback, continued up. Usually get a bit of a pullback, especially when your price is quite impulsive. You're not always likely going to get that pullback down to discounted demand on the 4-hour chart, right? You usually see price put up a little bit higher. But nonetheless, we are still within daily supply, like I said, so you do have to bear that in mind that at any point that daily swing structure could take over and we could switch bearish. Now, M15 chart, swing structure, nice and clear, right? Swing pullback, breaker structure, and then the pullback, right? So we clearly know that we're working within this as our M15 swing range. Now, I thought I'd bar replayed this, but clearly obviously haven't. So just bring this back to you around here. Cool. So this is kind of how price looked sort of pre-Frankfurt Open. So we've come into the extreme of that daily supply zone. Now, our expectation at the moment is just that it's going to be an M15 and a 4-hour swing pullback, right, down into demand, potentially to then continue higher. There is, of course, the potential that the daily swing lower high could form, and then we could be ready to take out the swing low, and then obviously the M15 and the 4-hour would potentially switch bearish. But we don't run with that assumption. The main probable assumption is that the M15 is going to continue, okay? So that's the main idea. We're going to look for continuations to take out that weak swing high. Now, if we look at the internal structure of the M15, we can see here, right, we had that pullback, bearish IBOS, internal pullback, bearish IBOS. So the internal structure has shifted bearish to facilitate the swing pullback. So the expectation is typically what we look for is that will continue, right, to facilitate the swing pullback. And then when we get that bullish IBOS, that's what will confirm the end of the swing pullback. It's only once we get the bullish IBOS and the M15 internal structure shifts bullish, that's when we then have true structural alignment and true structural confirmation that the M15 swing pullback has finished and now it's ready to take out that swing high. And then we assume that the M15 internal structure will hold until it takes out that swing high, right? That's the framework in which we use. And at this moment, that internal structure is bearish, right? So this becomes our strong internal high because it took out the internal low, and this becomes our weak internal low. So from an M15 internal structure perspective, what do we expect? We expect price to pull back up into this high. If this is a strong high, it should hold and it should continue down. So that becomes a very good trade idea, right? We can look for shorts to try and capture the next internal level to at least target this weak low, right? That's a nice simple trade idea, and then we can look to target into these levels, and then we can look for longs to try at least play the internal pullback into this level, or with the potential that the internal structure could then shift bullish, and then we can target that weak high, right, with the swing pullback being finished. So that would be like a nice simple play, looking to follow the bearish internal structure down towards this level for at least a quick move targeting this low, right? But what do we have to be wary of? What's the bullish case that potentially this strong high could fail, this strong internal high could fail, and we could shift bullish? Well, first and easiest case is always going to be that the swing structure is king. So at any point, right, swing structure can take over. That could be the end of the swing pullback, and we could be ready to go. 2, we've pulled back below the EQ of the swing leg, right? That's the premium discount tool. We've pulled back below it. So once we pull back to discount prices, that increases the probability, right, that the pullback is over and we could be ready to go. So that's another tick in the box for the bullish case scenario. However, we didn't really mitigate anything, if we look left, anything that clear in terms of demands. The only thing we have is the most recent demand range, right, from the low to the high of this internal pullback. Right, we've come down and mitigated that level. So that's kind of really the only thing we've mitigated, but it's not really that great, right? Typically, you would see price come down into at least a bit more of a refined level, right? That 4-hour demand zone and those M15 pivot zones within there, okay? And also, it's quite impulsive down, right? And then we've had reasonably corrective moves, so you'd think there'd be a ton of liquidity targeting. Typically, you expect price to come in and then target that, right? So kind of if I could keep it nice and simple, my main sort of, I guess, thesis coming into the session would be I'm going to look to see if this internal structure is going to continue. The only POI in which I'd be interested in at this point to play that move would be this wick supply. There's nothing else, right? This high hasn't achieved anything. It's super, super weak. And there's nothing else here. And also what I don't like one, I don't like wick supply because it's just wick supply. It's nowhere near as significant as when you have like a full bodied candle like this. 2, the distal of that wick supply, right, it's already been mitigated. Once it was mitigated here, like when it was created, right, when you had the candle close below it, price came back into it, filled the orders, and then that created that move. So that already means to me there's not that many orders left within that pivot candle. And then if you have even more doubt, prices again come back into it and then cause another decent move. So for me, that pivot candle is already done. And I'm just looking for any remaining orders from within here, which essentially is more of like an M5 zone. So not the best zone at all. This high didn't really mitigate anything previously. Yes, there was these wicks. I don't even know if it even hit that. It doesn't look like it did. If it came in here and like mitigated this level and then pushed down, okay, maybe a bit stronger, but it's not the best high in the world. All it's done really is called that bearish IBOS. Okay, cool. So I'm still happy to look for shorts from within here. Now, let's play price forward a little bit and it will make a bit more sense when we get into, but hopefully you can kind of understand the main idea of what I'm looking at. So as price starts to push up like this and start to break up above these highs, yes, potentially you could have looked for a quick scalp. Some of you guys are a bit more aggressive, and you could have looked for a continuation from within here or from within here. To essentially play the continuation of this move, right? With sort of your minimum target being like looking for a long from within here to target this high, but looking to play up into here and then looking for the bigger short to get that move with some potential that obviously this could, lead to the break of structure because we've had the swing pullback and we're now ready to go. Okay. So do I view this as high probability? No, but I can see the logic behind the way you may want to play that up into here and then take your profits for a quick scalp. Okay. So price came into here. There was a risk entry on the M1 in which you could have taken, right? That's where you would have been triggered. There was no M1 confirmation entry from within here. And then if you're going to take that, you want to be taking your profits either at this most recent high for a quick scalp or up at here, right? You want to be taking the majority of your profits at that level. Why? Because again, the larger internal structure is more powerful, and that's the expectation of what we want to look to happen, right? So as price came into, obviously it's happened with one candle, it's quite quick here, but as price came into this M15 level, I was happy to look to see, would price come in, give me my M1 entry model, give me my M1 chalk, so I can get in straight away, get in short, with the idea of playing that move to target this low, okay? That's the idea. So as we can see what happened in one candle, we obviously came from this demand, we came up into this level, and then we came down straight away. So what's happened here in this one candle is we have had a bearish M15 change of character. And this is a bit of a tricky one to see if you're kind of new to this way of analyzing, but it actually happens on this low here, the M15 chalk. And the reason why is because obviously we pull back with these candles here. And then when this candle finishes printing, what happens next? Price goes up with this candle and it breaks that fractal high. So that at that exact moment, where is the new low? It's going to be here, right? That's the new low. But then in the same candle, it comes down and it causes that bearish change of character. Okay, so that's where the bearish chalk occurs. It also obviously clears out this level of supply. So I'm going to come back to this in a second, but there's a few things here. One, I was happy again to look for the short from within here to get short on the M1, but it didn't happen. If we actually, let's take a look at the M1. Right, so this was the risk entry you could have potentially taken, right, if you wanted to look for that kind of quick move. Definitely something that's valid, right? You can see how that M1 zone makes sense. You could have covered the low or even covered there, right, 2 pips, and then that would have been your target, minimum target, or best target would have been to there, decent 7R to that high, or even better, right, up to that M15 supply there for just shy of 10R. Yeah, there was no, obviously, M1 confirmation entry because, as we can see, right, price pulled up, pulled down. That would have been your M1 chalk, so you would have looked to get tagged in on here, but it didn't pull back, right? It just shot up. As soon as that goes there, if you were interested in taking longs from within here, I would cancel your order because now price has mitigated that supply level, and the overall larger expectation is that's going to be the move that we get, okay? Now, as we came up into that extreme M15 wick, which was the main idea of, or the main area in which I was looking to get short from the session, there's obviously no M1 entry model here. We come straight up, so the chalk level's all the way down here, and then we come down and chalk down, right? So there's no move to get in short from within here, and this is important because now you need to reassess of what's going on the M15, right? Because although I still expect that this is the move that's going to come down, you also have to look at what's going on from within here, right? You can see these series of higher highs and higher lows, right? Now, whether you want to draw your internal structure with the candle body close, which is cool, then obviously that would be your low there. So you've got this move here, right? But the point still stands. It still brings you to the same idea that this is a strong level, the internal structure is still bullish, and there's that potential we can continue up, right? Either way, you can see that series of higher highs and higher lows. So when price has pulled back and it's at this point here, and it's coming into essentially this strong low, yes, this could fail because the overall expectation, right, is that we're going to get this move. But if you're not already in short and you're looking to get short from within here, when price has now pulled back down into this demand and that small internal bullish order flow hasn't been disrupted, if this holds and price starts coming back up to here, well, this high is weak, right? Yes, it has caused the bearish chalk, but in this exact scenario, you can see how it was just a bearish change of character to come into this level. So now as price is coming back up, do I want to be shorting from this high? Well, this high has failed to disrupt that structure. It's just caused a bearish chalk, but that chalk was just to facilitate the small internal pullback into this level. So now as you're coming up, it's very low probability to be looking to short from within here, right? And it's not just that on its own, it's everything together, right? The whole case, the swing structure is bullish on the M15, it's bullish on the 4-hour chart. You're basically just trying to play this tiny corrective range. CPI is coming up in a few hours. Typically, price action isn't very high probability before a high impact news event. Like, these are all pieces of the puzzle that you have to consider, right? It's always a case by case scenario. But ultimately, again, if I can keep things super simple, you want to be getting short from within here before the pullback has happened. Because if you leave your order here, the pullback has now occurred, the objective is now complete. So as price starts coming back up, especially with all the momentum, you're now trying to short from a weak high. Can these play out? Yes, okay, but I don't want to be, it's not about can it play out, it's about what are the basis of probabilities. And this is not a high probability trade in my opinion, okay? So happy to short from within here, but I want to get in here straight away so that then when this pullback occurs, I've removed my risk and or take profits. So then if this holds and we continue up, okay, no problem. The problem is when you're trying to get in short here, when price is coming back up and this high has failed to do its job, that's where you're trading from weak structure and it is not high probability in my humble opinion, okay? And that's pretty much it. Like, I don't have to sit here on the M1 and analyze that in deep, and now you can understand now why why this is, gone to the upside. There was, this supply, it's just a wick supply. The distal was already mitigated, and typically there's not going to be a ton of supply in here to cause a big move. So I'm still happy to look for that move, but if I can't get in and I've missed it, and then price has given its reaction, demand is held, right? This bullish order flow has not been disrupted, and now price is coming back up. One, this is a weak high, I don't want to be shorting from here. But two, even as price pushes deeper now into this supply level, like, it's already given its reaction. Like, what are the odds there's enough supply left in this wick now to then cause that move, right? There might be, but that's where I'd want to wait, again, for this order flow to be disrupted. I want to look for that move. Okay, now we've got confirmation, now we have alignment, and now we can go for that movement here, right? So yeah, I appreciate there can be a bit to take in, especially if you're new to the style of trading, or especially new to in general. Like, there's a lot of pieces of the puzzle we can look in here. There's a lot of confluence we can look at. But ultimately, if you want to concentrate on just one thing, the swing trend is bullish. So we expect price to pull back, and we expect price to go to the upside. Swing structure is always king. That's always going to be the most powerful. Okay. So if we pull back below the discount, you have to understand that playing counter swing trend shorts are becoming a much lower probability, right? Because the probability of the swing pullback is higher. So trying to short against that is lower probability. Okay, that's kind of your simple step one. Simple step two is, okay, we can follow the bearish internal structure and try and look for that one more move. But one, this is not a great level of supply because it's just a wick. Two, the internal of the internal structure is bullish. So we can look for shorts from within here. But if we don't get in the move and price has already pulled back, now this is holding. You're now trying to short from a high that has failed to do its job, right? And it becomes low probability. And that's it. And for some of you guys who are more advanced, you may want to look for the longs from within here to try and anticipate that large internal structure has shifted bullish. And that's absolutely cool as well, okay? So CPI is coming up. I would expect this to be quite a volatile event. It's kind of like the next lower, like if you kind of view rate announcements as the highest sort of impact in terms of planned news announcements. CPI is generally kind of the next one below that, because CPI typically, not always, but typically has the biggest, one of the biggest bearings on interest rate decisions, right? It's one of the big data points that they look at, like unemployment data as well. So yeah, there's a lot going on at the moment. So I'd expect a lot of volatile price action. So my biggest advice for anyone who's trading in New York is do not trade before that news release has happened and let the dust settle. If you want my true advice, if you want to kind of follow how I approach the markets, I wouldn't even be looking at price action until tomorrow now, in terms of looking for tradable opportunities. Typically, because you'll get spiky price action, you'll get structure and everything, going all over the place. So I'd rather let the dust settle, let price kind of have clear intentions, let it form clearer structure, and typically that won't happen until London tomorrow. So we'll see how it goes. But that's just my personal approach. So I hope you guys took some value from that. Watch it as many times as you need, and I'll see you in the next one. Cheers, guys.